Buying a house in 2022 is different from any other time in recent history where prices and interest rates continue to rise simultaneously. What's shocking is how many future homeowners are not buying homes in 2022 because of common myths about what's required to purchase. We'll discuss this and more coming up next. Welcome to the channel. I'm Jason Fiallo, your native Virginia realtor with Long & Foster Real Estate based in Northern Virginia. Today we'll be reviewing the requirements to qualify for purchasing and what you'll need to know before buying a home in 2022. Did you know you need a perfect FICO credit score of 850 and a minimum of 20% down payment to qualify for a new home purchase? Wait, you didn't? Oh, that's right. It's probably because that statement is false. What's stunning is the number of people who believe that to be true. Today, buyers can purchase a property with as little as zero money down and less than perfect credit. The USDA and VA are the two government-insured financing programs most commonly used by buyers for zero money down home purchase. Both programs have specific criteria which limit who can partake. For instance, USDA has a maximum household income limitation and specified areas deemed rural. The upside is there are no credit score criteria, opening the doors for many buyers with lower income and credit scores that would not qualify for a traditional mortgage. VA loans are specifically for veterans who have served in the U.S. military or are currently active. Like USDA, these loans are 100% financing but have specific criteria. Loan limits exist based on property location and may influence the city you decide to live and the target price range. If you're not eligible for either of those programs, you'll likely use either FHA or conventional loans. FHA loans are government-insured loans and require 3.5% down towards your new home purchase. What makes FHA loans attractive to buyers is the less restrictive qualification criteria for credit score, down payment amount, and the debt-to-income ratio. In general, FHA will work with credit scores as low as 580 with debt-to-income ratios up to 50%. The reason it's easier to qualify for those types of loans is due to the government initiative to help increase home ownership among those who would not be eligible under conventional loan standards. One of the critical drawbacks of FHA is that you'll always have PMI, which is private mortgage insurance, for the life of your loan, which could cost you hundreds of dollars monthly and thousands by the time the house gets paid off. Unlike FHA, the lender of a conventional loan can remove PMI once you reach 20% equity in your home. Other differences between the two loan types are that conventional loans require a higher credit score of 620. DTI thresholds are lower as well, allowing a maximum of 43%. Interestingly, conventional loans allow buyers to put down as little as 3%, which is just under the minimum requirement for FHA, although 5% is considered the standard minimum amount. Now that we briefly reviewed the different loan types and each program's criteria, let's talk about what documents you'll be asked for when it comes time to apply for a mortgage. In general, you will need the following: 2 years of W-2s or equivalent, 2 years of tax returns, 2 months of bank statements, and 2 most recent pay stubs. Buyers need to be aware that lenders want to see that you've been at the same job for at least 2 years. Exceptions would be if you change jobs but remain in the same industry. Disclaimer: I am a licensed real estate professional, not a mortgage lender, so always consult with a licensed mortgage lender to find out the current guidelines and criteria. I'm simply sharing information based on my years as a full-time realtor and helping countless buyers along the way. So what happens once you've applied for your loan and you get approved? Now is the time to start shopping for your next home. Remember, 2022 isn't a balanced real estate market. It is still favoring sellers, especially in desirable metro area markets. It's essential to understand this because it will help you prepare mentally and financially. For the most part, single-family homes are selling faster and for higher amounts above the list price compared to condos and townhouses. That's not to say condos and townhomes are on the market long. Where I live in Loudoun County, Virginia, competition is fierce for all three categories. Fortunately, not every house or neighborhood has the same demand. Within the past 6 months, one of my clients had to go $200,000 above the asking price in order to win a bidding war with 8 other buyers, while another client bought their home for $10,000 below the asking price. If you're a first-time home buyer, I would imagine how terrifying some of this may sound. For a more in-depth look at the first-time home buying process, check out my video at the link above. Since the current market is highly competitive, you will have to adapt to those conditions by being strategic with your offer. Here are 3 effective ways to help you, especially in a multiple offer situation. Get your loan approval underwritten. It will give you an advantage over most buyers because, unlike being pre-approved, going through underwriting requires more vetting by a lender, therefore reducing the risk of not closing on the purchase. Have a pre-offer home inspection. Multiple offers on a property often mean the seller can be picky and buyers have to be willing to compromise on the terms if they want a shot. A home inspection is an essential step in making a purchase. Still, when there's a lot of competition, sellers prefer contracts without one because it could lead to either a canceled deal or the seller having to make repairs. By getting a home inspection before submitting an offer, you gain knowledge of issues throughout the home while not adding stickiness to the offer. Finally, you must be flexible. Even in this market, contract terms are just as important, if not more important than money. Many sellers want to remain in the home after settlement so they have time to move or even shop for their next home. Offering flexibility in this case and others could be the difference between your offer being accepted or rejected. Thank you so much for watching. If you have any questions about what we covered today, don't forget to drop a comment below. Get in touch with me directly for anything else real estate related, and I'll be happy to help.